President Donald Trump has generated all sorts of headlines and stock sell-offs and rallies with his various tariff proposals. He's threatened tariffs against Canadian and Mexican imports. He's talked about reciprocal tariffs that would affect a whole range of imports and much more. This is what's been going on so far with the Trump administration tariff plans and how the stock market is handling it. Tariff proposals often weigh on stocks because they're taxes on imports that can add to companies' costs and get passed on to shoppers, as well as spark retaliatory tariffs. This is why Wall Street is watching them closely, and here are a few key dates. Trump promised to hit imports from Canada and Mexico with tariffs of 25% starting February 4th, unless they address his concerns about drug trafficking and illegal immigration. Canadian energy products would get a bit of a reprieve with a tariff of just 10%. Then on February 3rd, deals were put in place to pause those tariffs for 30 days. As this period comes to an end, concerns have come back, especially since on February 24th, Trump said the tariffs will go forward after the 30-day pause. Stocks sold off on February 3rd, but finished off their session lows after there was a deal with Mexico, and then after markets closed, a deal with Canada as well. Then on the 24th, after Trump announced that tariffs would be happening, the S&P finished lower. China, on the other hand, wasn't able to avoid new tariffs on February 4th, and its imports were hit with additional levies of 10% starting on that day. But markets for now haven't been that rattled, even as China has retaliated with its own tariffs as well as other measures. One reason is that Chinese imports already were facing many tariffs from Trump's first term and from former President Joe Biden. On the flip side, American steel stocks like Nucor jumped on February 10th as Trump steadied to put 25% tariffs on all steel and aluminum imports starting March 12th. Supporters of these tariffs say that they protect American products from unfairly priced steel from other countries. Stocks also jumped on February 13th as Trump ordered studies on reciprocal tariffs that would be completed on April 1st and could lead to tariffs on April 2nd. The gains came as traders expressed relief that the reciprocal tariffs weren't hitting immediately, but rather there might be time for negotiations with trade partners. So what would the reciprocal tariffs be? Trump has said if a country hits U.S. goods with a 100% tariff, he wants to impose the same exact tariff. If they charge us, we charge them. In addition, the Trump administration has said the reciprocal tariffs would take into account non-tariff barriers, such as value-added taxes and potentially unfair regulations. Peter Navarro, a Trump trade advisor, has identified potential top targets for reciprocal tariffs in this chart that he put together before last year's election. Navarro has suggested prioritizing countries with relatively large trade surpluses with the U.S. and those that apply relatively high tariffs on American products. So China and India are his top targets, followed by Thailand, Taiwan, Vietnam, and the European Union. And finally, Malaysia and Japan are in a third tier. One takeaway from all these tariff moves is that the bark is worse than the bite. A couple of investing strategists have put it that way after seeing the pause for tariffs against Canada and Mexico, as well as the move with reciprocal tariffs that ended up being not as onerous as initially feared. So if that view makes sense to you, you would stay the course with your investments and be focused on what's actually getting implemented rather than what's just getting proposed. Howard Lutnick, Trump's Commerce Secretary, said during his confirmation hearing that the potential levies against Canada and Mexico are not a tariff per se, but instead an action of domestic policy to get them to respond to border issues, not to traditional trade issues. So that's the first bucket, and the second bucket is what Lutnick described as a long-term tariff model that's getting studied as part of a report that's due April 1st. Tariffs in this case are about trade issues, and they seem less likely to get paused.